Good morning, everyone. Welcome to Prebell with William O'Neill India. My name is Rajashekar Kongari, Equity Research Analyst, part of MarketSmith India team. Before we go ahead into this podcast, the disclaimer is registration granted by SEBI, membership of BASL, and certification from NISM in no way guarantee performance of the intermediary or provide any assurance of returns to investors. Investments in securities market are subject to market risk. Read all the related documents carefully before investing. With this disclaimer, let's move on to the main part of the podcast by analyzing Nifty's daily chart. Recently, there has been a lot of action on the Nifty front. It made a new all-time high around this level, almost 22,800, on which we made the market status change to confirmed uptrend. But after which the market started to reverse and it breached some of its key moving averages. First, it breached its 21 DMA, followed by its 50 DMA as well. And 100 DMA has acted as a very good support for the Nifty. This pink line is the 100 DMA. Historically, 50 and 100 DMAs have been a very good support for the Nifty, and that been reflected in the current situation as well. And recently, because of this market breaching its 50 DMA, we changed the market status to under pressure. But currently, you can see here there is slightly pullback from the lower levels. Yesterday, you can see Nifty closed above its 50 DMA, which is a very positive sign. Nifty trading above 50 DMA is a very good sign for the longs. As long as it stays above 50 DMA, it's going to be good for the longs. But key moving average, such as 50 and 100 DMAs, if they are breached, further selling can be expected on the market. On the upside, if the Nifty makes a new all-time high, that is 22,800, that is 400 points from here, we will be changing the market status back to confirmed uptrend. On the downside, if there is any further accumulation of distribution days and Nifty breaching its 100 DMA on higher volumes, we will be changing the market status to downtrend. Market status is a very key parameter in cancel methodology, which helps us uh, in order to take exposure towards the market. In confirmed uptrend, the probability of breakouts will be on the higher side. Once the market status is in downtrend, the probability will be on the lower side, and breakouts number will also be on the lesser side. Currently, distribution day count is at 3, and if that distribution day count increases to 5 or 6, and Nifty breaches its 100 DMA, and along with broader market indices also will be kept in mind while changing the market status to downtrend. Earning season for the March quarter is still going on. Vodafone Idea has come up with their numbers. Revenue has slightly dipped to 0.6% sequentially to 10,000 crores of rupees. It still continue to report losses, and the losses for the quarter widened almost 10% sequentially to 7,600 crores of rupees. Average revenue per user, that is ARPU, which is a key parameter in telecom stocks, has increased by 1 rupee in the current quarter. Biocon Pharma has also come up with the results. The revenue was up 3.8% year-on-year basis to 1,300 crores of rupees. The profit on the other side declined sharply 46% to 223 crores of rupees. Container Corporation of India revenue was up 6.4%, whereas the profit increased more than 13% to 317 crores of rupees. Triveni Turbine has come up with their results, a very good set of results. Revenue increased 24% to 458 crores of rupees. Profit has increased more than 37% to 76 crores of rupees. In the today's session, stocks such as JSW Steel, Zydus Life Sciences, NHPC, Rail Vikas, Bandhan Bank, Shobha Realty, Amber, LT Food, and other companies are expected to report their numbers. So if you have any of these stocks, please be watchful for your positions. Volatile action can be expected in these stocks. Coming to the institutional activity, yesterday FIS sold 777 crores of Indian equities on the net basis. Whereas domestic institutional investors have given very good support for the market. They have bought more than 2,100 crores of Indian equities. Overnight, yes, market closed in the negative territory. Dow Jones closed 0.1% lower, whereas S&P and Nasdaq closed 0.2 to 0.3% lower. Asian markets are also trading on the slightly on the lower side. So overall, global cues are on the negative side. GIFT Nifty is indicating a muted opening for the index. Yesterday, Nifty closed around 22,411. So a 40-50 point higher opening is not a major gap up or gap up opening. So muted opening is expected on the market, and global cues are on the negative side. So we might see Nifty consolidating around yesterday's close or 50 DMA, which is very close to the yesterday's closing price. The chart of the day, we picked Welspun Corporation. The disclaimer is that this is our already existing stock in our portfolio. We have added it recently. We looked into the story of the annual report and company presentation and con calls as well. It has a very good set of results, and as well as commentary has also been very good. Numbers, the ratings have been very good, the company's ratings. And number of funds has also been shown very good improvement in the last 4 quarters. Currently, it is trading in the idle buy range. It is just 2% to the pivot. This blue zone is the idle buy range. And if it continues to stay in this range and on above average volumes, definitely a very good stock to add if you have not added already. On the downside, this 50 and 100 EMS are very close to each other. So these two levels will be kept as stop loss levels going forward. Thanks for joining today's debate. Have a good trading session.